Hello everyone. Today we're going to have a brief market recap, then talk about the Canadian economic indicators coming out today. This is Marshall Gittler, Head of Investment Research here at FXPRIMUS, bringing my European opening market comment. Now, sterling is the best performing currency over the last 24 hours after the dual shock yesterday. The UK High Court ruled against the government and said Parliament has to approve Brexit. That will delay the UK pulling out of the EU and makes a soft Brexit more likely, which are both good for the pound. At almost the same time, the Bank of England turned neutral and said there are limits to the extent to which above target inflation can be tolerated. Whereas before they said they expect to cut rates again, now they're saying rates could move higher if necessary, as well as move lower. This is all very supportive for the pound. Risk appetite has come back somewhat as the market calms down about Trump's improving performance in the polls and talk of the FBI aggressively pursuing investigation into the Clinton Foundation. Remember that in the U.S., even winning the popular vote doesn't guarantee winning the election. Regardless of the popular vote, Trump has a difficult path to getting enough electoral votes to win. Take a look at my webinar on the U.S. election that's on our website to learn more about the distinctive way that America elects its president. And anyway, as risk aversion diminished, the Mexican peso gained 1.5% against the dollar, while the safe haven yen and gold fell. But stocks were down nonetheless as the VIX index rose further. As for today, it's non-farm payroll day. The U.S. non-farm payrolls come out this afternoon. That's the key point for the day, so it deserves its own video. I'll do a video discussing just that later. Also in the U.S., the U.S. trade deficit is forecast to narrow slightly. That would be good news, but coming out at the same time as the NFP figure, I'm afraid its impact will just get lost. As usual, Canada announces its employment data at the same time as the U.S. releases its employment data. It's difficult to disentangle the impact of the two data series on dollar CAD. The U.S. is so much bigger than an economy that what happens on the USD side usually swamps whatever happens on the CAD side. Especially this time, the unemployment rate in Canada is forecast to stay at 7%, which is not a particularly high level for Canada, and so shouldn't trigger any alarm bells. Meanwhile, the Canadian trade deficit is expected to narrow slightly, which could be positive for the Canadian dollar. But I expect the weakening in the oil price will remain dominant for the currency, and the economic data might not have that much influence. For a discussion of the U.S. non-farm payrolls coming out later today, please watch my North American opening comment. This is Marshall Gittler, Head of Investment Research at FXPRIMUS. Get more market insights on our education pages and turn your trading ideas into action with FXPRIMUS, the safest place to trade.